Hi everyone, thanks for joining us today. We're here to discuss navigating wage compliance, so strategies for protecting your business and your employees. In terms of who's speaking today, so it's me, I'm James True, the practice group leader in LegalVision's employment team. LegalVision's a full service commercial law firm, but particularly my area is in employment related compliance. And I'm joined here by Chris Brunton. Chris, I'll let you introduce yourself.
Thanks, James. Yes, Chris Brunton. So I've been working in this particular space, payroll, etc., for over 30 years with a number of very large organisations. Currently, my role is Director of Payroll at Deel. So I look after all of the payroll operations teams across this region. And Deel is an organisation which is a global leader in providing technology solutions for handling areas which we're going to talk about today. In particular, it has solutions around contractor management, employer of record, which I'm happy to explain separate to this webinar, and also global payroll. Thanks, James.
Thanks, Chris. Good to be joined by an expert on the ground to help me out when I can talk about the legal issues. Now, before we get started, just some housekeeping things. After the webinar, you'll receive a recording and the slides. They'll come in your email. Throughout, you can submit your questions. There's a Q&A box there, and we will try and get to as many as we can at the end. Finally, there is going to be a survey afterwards for your feedback, but it'd be great if you really could give us that feedback. We're always trying to make sure these webinars are as good as they can be for you, so we take the feedback really seriously and try and improve them as we can. As well, for the next 48 hours, you can receive a complimentary consultation with LegalVision. We'll talk about how we can assist you. That might be also useful for anyone who doesn't get their questions answered, an opportunity to discuss those issues as well. And just to claim that, as I said, there's a survey at the end, and just fill that out and you can book it in through that. All right, what are we talking about? We'll work through some key sources of employee entitlements, talk about some common entitlements, work through employees and contractors, so some changes to the law recently there, and then finally touch on wage theft. And functionally, I'll probably just talk about the legal issues in relation to these matters, and then Chris, as I said, is the expert on the ground and actually providing a lot of solutions for businesses in managing these issues. So he'll be kind of able to give those on the ground insights. But for now, we'll just jump straight into it, and I'll talk about key sources of employee entitlements. All right, so when we're looking at entitlements for employees, there's very much a hierarchy of entitlements. Every employee is going to be entitled to what's within the national employment standards. Things like the minimum wage, things like 4 weeks annual leave for a permanent employee, sick leave, parental leave, notice of termination. All of those things exist in the national employment standards, and they're a baseline basically for every employee in the country, bar a few who are not within the Fair Work system, but which maybe some state government employees, etc. But the very, very, very vast majority of employees in any kind of private business will be covered by the national employment standards. That's the baseline entitlement. And then above the national employment standards, you have modern awards. Now, modern awards are basically industry or occupation-specific entitlements. Now, they cannot undercut the national employment standards, but they go over and above it. So, for example, if you're a business working in the retail industry, well, it's quite likely that your business and your employees will be covered by the General Retail Industry Award. So it sets special and slightly higher minimum entitlements, say above the national employment standards, for employees working within that particular industry. It's also the type of thing that's going to entitle employees to things like overtime and penalty rates and allowances, which we'll discuss in a little bit. Other awards can apply just by reference to occupations. So, for example, where you've got admin employees in your business, well, they may very well be covered by the Clerical Employees Award, which is an occupational award. And again, that's basically an industrial instrument that is giving those particular employees entitlements above what's set out in the National Employment Standards. Then again, you can go another rung higher over and above that modern award with what's called an enterprise agreement. Now, you'll know if you've got an enterprise agreement because this is basically an agreement which just covers your particular business. Ordinarily, it can cover multiple employers, but ordinarily it's just setting company-wide, really, entitlements. And again, that can't undercut anything that's in a modern award. But an enterprise agreement will entitle employees to very similar things to a modern award would in terms of penalty rates and allowances. But it's a way of creating very specific allowances to your business. You take a step up again, and you'll have contracts of employment. Now, every employee should have a contract of employment. And once again, that contract of employment, it can't undercut anything that exists within those instruments that I've mentioned before. So you can't contract out of, for example, the minimum wage, or you can't contract out of those minimum entitlements to leave, sick leave, etc., or notice of termination. So even if the employee signs that contract, it's not going to be enforceable. So it then sits on top of all of those. And of course, it can deal with all of those entitlements, for example, by paying an annualized salary. And you need some very specific terms in an employment agreement, which says, you know, the money that we're paying you as an employee is going to cover all of those entitlements that you might have under the National Employment Standards or that you might have under a modern award or an enterprise agreement. Contracts of employment can deal with some other things as well, like confidential information and intellectual property, but they're critical in terms of setting out what an employee is entitled to. But it's very much an entitlement that you've agreed in contract rather than one exists at law. On top of that, again, workplace policies are very common places that an employer might give an employee an entitlement. So a good example would maybe be in relation to something like paid parental leave. There's no entitlement to that at law, but commonly an employer will operate a policy which sets out what an employee can get in terms of paid parental leave. So again, that's yet another entitlement sitting above all of those other ones. And then finally, you know, we talk about the sort of national employment standards covering everyone. There are some state-specific pieces of legislation. For example, long service leave is different state by state. So, but it still creates a source of entitlement for a particular employee. Now, the important thing to know here, I guess, is that, and what needs to come through from that list there is that there are many, many places where an employee may have an entitlement. Things like understanding minimum wage is usually pretty clear and uncontroversial. So understanding what's in those national employment standards, not that hard to figure out. Modern awards very commonly will catch a business out because they just apply at law. There's not going to be any opt-out or opt-in, so you need to know about those entitlements. An enterprise agreement you're likely to know about, and of course contracts of employment and workplace policies, well, you've drafted them, so you'll probably know what's in them. But these are all the places that an employee may actually have an entitlement, so there's a lot that you as a business need to be across. With that in mind, I might pass it over to Chris just to work through some of those as well.
Fantastic. Thanks, James. Just wait for the slide to change over. There we go. No problem. So these are just some talking points. I'm literally going to provide a bit more depth in relation to these items. But as James has highlighted, I think the key message from that previous slide is labour management, etc., is complex. We've got a whole range of standards. It's the same globally, but in Australia in particular, it is a complex area to navigate. And one of the challenges I've experienced over my career, and a lot of the reasons that people come to companies like Deel or other providers, is because of the complexity in managing this. Often an organisation will start relatively small, have a full-time or casual workforce. Managing that process is quite simple. Suddenly they grow larger, they might have hundreds of employees, and then you've got all of these considerations to bring in. And as James mentioned, you've got the complexity of the law and the minimum requirements, but then organisations very much want to offer benefits to the employees to be competitive in a space at the moment where we've got very, very low unemployment, and it's very easy for people to transfer one organisation to another simply to try and obtain additional benefits. The key thing which I've also found from the technology perspective is a lot of companies whether they start off or they begin using manual methods to try and calculate all of these components. So the use of Excel, Google Sheets, etc., is very problematic in this space because everything is changing so frequently. I know it's very obvious when you get a superannuation change or a change in minimum wage, etc. As James said, those are relatively easy areas to navigate, and potentially you can use a manual tool to be able to calculate payroll benefits, etc. But there's a lot of other factors, as was highlighted. We've got changes occurring in awards, things such as, overtime allowances, days worked, and these things are applied, as James said, from a national perspective, but then there are state-based laws and all of these sort of components. Add into the mix that suddenly you've got to think about an employee, where they're located to calculate things like long service leave and payroll tax and other elements. That's a real challenge to be able to do this. So the benefit of a payroll technology solution is to automate as much of that as possible. But I do really want to highlight it can automate a lot of these factors, but there still needs to be a constant review on a periodic basis to make sure that you're paying things, in particular where there's an EBA or an award in place, because those elements can change. It's not a concern if you decide as an employer to offer above the award conditions, but obviously if you're offering below, that's where some of the other elements we'll talk about later come into play. So technology provides that means. The other thing which technology does is by allowing, if an employee has a change in their situation. So the evolution of an employee from starting in a business, and my wife's a good example. She started full-time in payroll and has now worked part-time, since having a child. That means the benefits have to be calculated from a point in time and then adjusted. So obviously accrual of leave and things like that change when you go to part-time. And number one, you don't want to underestimate any of these components, but you also don't want to overestimate. And that'll be something we talk about a little bit more through here. So the other key factor I wanted to highlight is record keeping. So from an ATO perspective, from just an appropriate thing for a company to do, you need to have a record of every single payroll you conduct. And it's not only a case of keeping the level from a tax compliance perspective, which might be X number of years, but there are factors such as long service, etc. You've got to actually factor that in, even going back earlier. So you've got to have a record of every payroll you've conducted so that if there is any queries in regards to these entitlements, they get covered off. All of that is covered when you're using a technology solution to be able to handle these entitlements. Thanks, James.
All right. Yeah. So, and with that is probably we can move into looking at, well, what actually are some of those common entitlements that you might see. And this is, what I talked about earlier in terms of those sources of entitlement. You have to know within your business what actually is the source of the entitlement for all of the employees. And as I mentioned, there are obviously very many of them, and employers can be caught out. But starting as actually determining the source is the first point. Now, if you're going to pay everyone, extremely high annualized salaries, sometimes a lot of these sort of compliance issues can fall away if you obviously got the correctly drafted employment agreement. But if you brought a workforce, knowing if they're covered by a modern award is critical, because if you've missed the point, if you didn't realise there was a modern award applying to a particular employee's employment, there are very many things you'll miss, and it is very easy then to walk into an underpayment And the thing with underpayments is that, you know, a small error and even a small inadvertent error snowballs very quickly. If any of it happens at scale too, because if you've missed one employee, you're likely to have missed others. These turn into big liabilities very quickly. So understanding what actually is the source of entitlement in your business, doing some mapping in that sense is a really critical thing to do to make sure you can actually manage wage compliance. And as I mentioned earlier, if we're talking about a modern award, for example, it applies whether you like it or not. And as I said, if we talk about, you know, an example was general retail industry, well, there's a modern award out there that says it applies when you work in that industry. It's defined. So you don't get to choose to opt in to the modern award. So you have to know is the first point. When we look at then moving through in terms of what actually are those entitlements, well, yes, the obvious one is they're going to be entitled to wages for hours worked. Now, if they're covered by a modern award or maybe an enterprise agreement, it's going to set out what that minimum entitlement is for each particular employee. And ordinarily, those awards and enterprise agreements will classify employees at different levels, you know, so a more junior or newer potentially employee is going to be entitled to a lower amount than someone who's doing more complex duties or higher responsibilities. And so each of these modern awards will have a guide which sets out, you know, all the different levels and all the different wages. So you not only need to know that the award applies, but you then need to know what level the particular employee is within that. That's just to set their base hourly rate. Now, on top of that, then you'll have these additional components on top of the wage for the hours that they've worked. This might be things like loadings or penalties or allowances. So loadings, commonly you might see an annual leave loading. A lot of modern awards have this, that actually the annual leave hours that you pay to the employee is meant to be paid at a higher rate, usually about an extra 17.5%. Penalty rates, most commonly things like Saturdays, Sundays, public holidays. Employees, when they're covered by a modern award, commonly entitled to something like, you know, 150% on a Saturday, 200% on a Sunday, and sometimes 250% of that base rate on a public holiday. Now, it's all, they're kind of generally the case, but every modern award is different. So it's critical to understand what rate do I actually need to be paying for the Saturday or Sunday. You might also see things like overtime entitlements is another common one for employees. So most modern awards are going to set out what are ordinary hours. And so, you know, it might be something like 38 hours a week and the hours that are worked within a particular span of hours. And anytime an employee works outside that, either over the 38 or over a certain span within the day, then the employee is going to be entitled to potentially overtime and different rates of overtime. So all of those things need to be very clear about. Once you've identified the award, then becomes a question of actually determining what is payable. The allowances there, commonly industry specific. So, you know, for a building award might give an employee a tool allowance or something like that, an award where it contemplates employees in that particular industry need to drive a lot. It might have a very specific vehicle allowance. In other industries, you know, where they're required to have a uniform, there'll be an allowance for a uniform. And if they're required to wash it, there might be a laundry allowance as well. So all of those entitlements, which go far beyond just a minimum rate of pay for the hour that's worked, will live within a modern award or potentially an enterprise agreement. Some businesses will create their own kind of internal additional allowances. There's nothing stopping a business doing that. When we look at that source of entitlement, for those types of issues, that's commonly what you would be seeing. If we move on then to the leave entitlements there, these are generally standard and determined by reference to the majority of it within the Fair Work Act and the same for all employees. And then, of course, the long service leave is state by state. But I mean, Chris made a good point earlier when you're talking about an employee who might be on part-time basis, or they might have varying hours of work. So personal leave, annual leave, long service leave, all of those accrue by reference to your length of service. But annual leave and personal leave, for example, will be prorated against full-time hours. So if you're a full-time employee, you're going to be entitled to 4 weeks of annual leave in a year. And that prorates down. And the trick for businesses then, of course, is making sure that you are appropriately reporting someone's hours there. And if people are moving from part-time to full-time, back to part-time, then that can create a compliance issue very quickly if it's not being recorded in the system. Equally, someone who's on a variable roster, which is sometimes the case for a part-time employee, needs to have really accurate tracking of their hours so that you can actually then account for those leave entitlements, because they're accruing as you go throughout the year. It's not the case that you get to the end of the year and then figure out what the annual leave entitlement was. It's a live accrual. Finally, just want to touch on superannuation there. Now, I'm by no means a superannuation expert, and we do have a dedicated tax team at LegalVision, and they are the superannuation experts. But it's worth raising here because it's absolutely something which, yes, it's an employee entitlement, and generally speaking, applicable in relation to an employee's ordinary time earnings. So your obligation as an employer is to contribute a certain amount of super in relation to the employee's earnings, but not everything that you pay to an employee requires a superannuation contribution. So, for example, some overtime payments will be excluded. Some hours, I said outside their ordinary time hours, whether super is payable on bonuses or commissions, those will all be sort of specific things that you need to work through as an employer to make sure that you're actually accounting appropriately for that entitlement. So absolutely something you need to very much be across, which I guess is a good time to hand over to back to Chris there in terms of, I guess the things that people need to look for if they're going to try and manage it beyond using an Excel spreadsheet, typically knowing that all of those entitlements are sitting there, how platforms, I guess, can actually assist with all of that.
Thanks, James. So very much again from a technology viewpoint and being able to manage the complexity, because I think that's really the key component James was going through, was all of the complexity around all of these aspects. So the key thing is, again, going back to using a manual solution. How do you apply automatic changes associated with superannuation? Recently, obviously, that moved up from the 1st of July. Tax changes, which affected every single employee from the 1st of July. All of those components need to be adjusted and calculated. This is where, from a technology perspective, all of that can be automated because it's standard across the entire Australian workforce. Doesn't matter whether you're a casual, it's all linked to your casual, full-time employee, part-time employee, and that's where the payroll system can automate all of those, take away the pain, take away the stress, then updating and manually trying to calculate those yourselves. So one of the other things which a payroll system will also cover off, and it's an area where a lot of companies get into difficulty, is payroll tax. So although this is not linked to an employee entitlement, it's a payment by the employer, it is complex. If you've got someone working in a border situation, Albury, Wodonga, and potentially moving between locations, this is where the payroll system can capture all of that information and understand the tax liability, which varies as a percentage depending on where the location is which you work in. So that's a particular area we find that organisations struggle without the use of technology and appropriate third-party experts to be able to provide these solutions. Now, key thing linked to this is vendor selection. I know it's sort of, drifting away a little bit from the entitlements, but just linked to this it's no use selecting a piece of technology if it hasn't been proven, if the organisation isn't, doesn't have a reputation for compliance, they're not financially viable, reputation, and conducting external audits to give you a level of comfort as a customer that all of these components are actually covered off. Now, a lot of the standard entitlements, as James mentioned before, are pretty straightforward, like, full-time employee, 20 days annual leave, 10 days personal leave, etc. But when you move to having a large portion of part-time employees, which may have variability in how they work, and particularly with casual employees, etc., a lot of these components get really, really complex. And that links in also to awards and EBAs, where there are constant changes coming through legislation associated with these changes. Without a technology solution, it's just impossible to be able to manage it. Now, I did want to also highlight what James said. A lot of organisations are now taking things like annual leave. Annual leave is an interesting one because this is where there is a lot of variability in customers, people offering potentially 5 weeks annual leave. That's very common. And then you've got to consider, okay, you're adding an extra week of annual leave, but is that something that accrues like the standard annual leave because you don't have a legal necessary obligation to handle that? So it's a great thing to sell, but you've got to make sure you communicate, and then it has to be adapted in the payroll system appropriately. Long service leave has a different set of challenges because it is state-based. When you can take it, at what point it accrues, all of these elements can vary. And actually, in a lot of awards, and especially in government departments, the levels are actually at a higher rate than what normally occurs in a private industry type organisation. So they're really key factors to have to work through as well. So one of the key things around which I find is having a technology solution allows you to adapt and make these change quicker. But the key thing with technology is making sure you get the baseline right. Where I've seen the most problems is when you implement a new piece of technology, the implementation is rushed, so you're not looking at all of the considerations associated with awards and in terms of employment. You get that wrong, and that's when, we'll talk about wage theft later, that's when you find out 5 years later that you've misconstrued, less so on leave, but certainly on rates of pay and conditions associated with that, meal allowances. James mentioned things like uniform allowances, all of those components. They're the ones where people can really get tricked up on, and particularly overtime. Overtime based on, whether it's working a Saturday, Sunday, or it can be far more complex associated with working 12-hour shifts over that, and there's a whole range of conditions associated with that. Now, technology does provide a means to make that easier to manage, but I really wanted to say, again, it can be a grey area, as James said, and it can be very difficult to interpret. Often we find, even with standard awards, that different organisations interpret it in different ways themselves. Again, if they're interpreting above what the legislation states, then that's okay, although you may be paying more than you actually need to. But at the same time, if you're paying below, that's where, unfortunately, people can get in the news, depending on size of organisations, and it ends up becoming a real challenge. The other thing which I really wanted to highlight is there is a benefit in actually using external companies potentially to do the payroll, or a bit of a mix. We see a lot of organisations who do a bit of a hybrid. They want to do things themselves. Certainly things like time entry, etc., is important, but actually have someone else execute the payroll, because by outsourcing, you get people who can look, number one, they're dedicated teams. These are people who have been processing payroll for, potentially decades, and they've got a level of experience which you may not have internally. So in particular, depending on the size of the organisation, outsourcing can add that additional eye-level check to be able to determine if there's potentially something missed. But at the same time, the onus is still with the employer. So one of the key things which I always have recommended to customers is that independence check, like I mentioned on the previous slide. Keep an eye on options, etc., any changes in regulation, but then making sure that they're applied. Ideally, the last thing you want to have, and it is usually the case in these situations, an employee who comes back and says, you know what, my pay's incorrect. And then you dig deeper and you find it's not only that employee, it's your, potentially 10, 20, 100 employees who've had this factor. And then there are a whole bunch of reporting obligations under Fair Work, which are required, and potentially, things can escalate from there. So these are sort of key considerations which I've found around employee entitlements. Thanks, James.
Yeah, thanks, Chris. And it's interesting. So we'll be moving on to talking about employees and contractors. And I think a common approach that maybe a lot of businesses have taken from time to time is to just call someone a contractor. And of course, things are more simple when someone is just a contractor. All of these entitlements that we've been talking about apply in relation to an employee, whereas a contractor won't have any of those entitlements, won't have any annual leave, sick leave, etc., but will just have an invoice paid. So given sort of, everything we've raised there, to a degree can kind of sound a bit doom and gloom, and certainly complicated and a headache for a business. And so I guess this section is an opportunity to now talk about, okay, yes, it sounds like a really great solution to just engage contractors to do the work, because that headache might be gone. But you may be replacing that headache with another one, which will lead us into this. We're talking about the distinction between an employee and a contractor, which has been a kind of hotly contested area of the law. Really for the last sort of 25, 30 years, we've seen cases kind of go back and forth in how to determine this. We've probably got the most settled position that we've had since August 28th this year, where basically the federal government has legislated to kind of really try and make this clear to everyone. And I'll talk you through how that works. From 2022 to 2024, basically the way to determine if someone was a contractor or an employee was to look at the contract that the parties had between each other, and to look at the key rights and entitlements within that contract. And if it set out the rights and entitlements of a contractor or an independent contractor, well, you had an independent contractor. Now, that was quite an employer-friendly decision, in that it kind of de-risked making someone a contractor. And we probably saw a big increase in businesses using contractors for that reason, because they could, in a sense, manage the liability with getting a properly drafted contract. Now, since August 2024, we've gone back to what used to be the case prior to 2022, which is that now, if anyone's going to make an assessment as to whether a worker is a contractor or an employee, there's now a clear test under the Fair Work Act, which says it'll be determined by reference to the real substance, practical reality, the true nature of the relationship between the individual, so the company and the worker. Now, what this means is you can have a contract which, says what it wants to say, and the courts can look straight past that contract and look at the actual relationship. So to a degree, there's probably a bit of the baseline point here is that it's not that risk-free anymore to bring on a contractor. So you need to be ever more concerned about whether someone is an employee and therefore entitled to employment entitlements. In terms of, when we say the real substance, the practical reality, the courts, what they'll do here is basically make an analysis of that whole relationship under some key indicia, which are integration and control. So when we're talking about integration, it's a question of, how much is that worker, we might have called them a contractor, but how much are they integrated into your business? Are they, wearing your uniform? Are they using your email sign-off? Are they kind of operating within your business? Or can we say, no, this is a person carrying on a business of their own. They're not integrated and they're providing services from the outside into our business. So obviously a high degree of integration is looking like employment, and lower integration is a sort of tick in the box for independent contractor. The other heading they'll look at is in control, and that's not so much about about controlling what work is performed. Of course, a principal, so the company and an independent contracting arrangement is still going to control the work that's being done, because of course they're going to tell their contractor what to do. But this question of control is, how much is that company controlling the way in which the work is performed. And so again, you know, high degrees of control looks like employment. Whereas if we're really saying to someone, hey, look, here's the task, you're the expert, you carry on a business of doing this, get the job done, and we'll leave it to you. Well, now we have less control, and we have a better argument to say someone is going to be a contractor rather than an employee. So this is absolutely something now that you know, you need to be doing a review on, and doing some workforce mapping, having a look at how your contractors are working to make sure that you don't have in-substance employees here, because there are consequences for getting it wrong. You can be penalised by the Fair Work Ombudsman for doing this. It'll be a breach of the Fair Work Act, a sham contracting type penalty. But then, of course, you may have paid this contractor a lot of money, but if it's determined that they're an employee, you're still going to then have to make a back payment of all of those entitlements. So, you know, you might be back paying things like annual leave, sick leave, notice of termination, if that's where it's been, a redundancy payment, things like that. So it's pretty significant liability for businesses and something they've got to manage. And I know, Chris, we've talked about earlier that this is something, you know, contractors can sit into a kind of outsourced payroll program. So I'll hand back to you, chat us through sort of, the issues with employees and contractors and what you can do with them from a process perspective.
Thanks, James. And linked to this is a really interesting topic for me because I've seen so many employers get caught out by not recognising contractors as employees. And then, as James said, it really is a challenge in regards to the law in converting. Do you have to convert at that point in time? Is there back payment, etc.? It does get to be very, very complicated. So ideally, what you have in place is technology which is supporting understanding as best as you can. As James said, there's a range of factors around this, but a really standard one, which is an obvious one to keep an eye on, if you've got someone conducting regular work patterns and you're paying them regularly and you're paying them, let's say, 40 hours a week, that essentially starts to make you look at, well, hang on, this individual is essentially just doing work. Unlikely they're doing much outside of that, potentially, if they're doing that many hours. So therefore, there is a potential that this person could be considered as an employee. Now, the big challenge I've seen on contractors is most organisations are handling this through accounts payable. So what that means is you may get timesheet data on the individuals, but it's not stored centrally. It's not easy. Generally, finance will receive, obviously get an authority internally to approve an invoice. That invoice may contain the information of, oh, this is 40 hours or 40 units or whatever, but it's then not tracked somewhere else for you to then go back periodically and go, hang on, let's have a look at all of my employees. What's the work hours? What's the work patterns? And there could actually be a financial advantage in converting some contractors to employees as well. I know there's additional benefits, but you can restructure a package. You can negotiate with the employee to get to that. But as I said, the key issue in this area is it's not handled within the payroll system. Contractors are handled generally through accounts payable, and that means the tracking is a real issue. So you have to have an independent type project with finance to be able to identify if you've got anyone in this situation. And as I said, just because they're working standard hours, as James highlighted before, there are a range of other factors. They may still be considered a contractor because of the way they engage with your business, but it gives you a flag to be able to look through and say, okay, and should we be negotiating and working through with each individual the potential for that? And as I said, there can be benefits to the organisation in converting them. The other key thing around this is, ideally, if you can have a system in place, and very happy at Deel, we do have a system which covers both contractors and it covers, payroll employees and actually covers employer of record employees, which is a different factor as well. So it allows you, once you identify someone, to make the transition relatively simple from, being a contractor, you're not having to rekey standard information, biographical information, etc., and getting them over as an employee and then setting up the appropriate conditions for that employment. So that's a key factor, because every time you have to re-enter information, there's always a risk factor associated with that, especially when you're working off manual invoices versus actually putting them on a payroll system and getting all of those components correct and working appropriately. I have seen a number of cases where employers have left things too long, and then, as James highlighted, they've had to go back and do a huge reconciliation, significant outlay in paying superannuation in particular, actually taking up leave accrual, leave benefits, all of the components we mentioned before, and it's a really, really difficult area. The other thing around having a system in place which can manage both contractors and payroll is these systems often provide compliance information, things similar to what James was going through before, things you should look for. Again, the onus is on the employer. You can't outsource those responsibilities, but at the same time, anything which provides some guidance and allows you to determine whether you should be thinking about X, Y, Z is going to be key. And then obviously getting external advice is really key on that component as well. So as I said, one system, moving employees around, etc., and handling those benefits is really the key things which I've seen in this particular space.
Yeah, and I could see absolutely if you've got it in a system where you're able to actually get a better idea of the hours in a sense that are being worked there. If everything's sitting in accounts payable, then all you're really tracking is the invoices from your contractor. If it's sitting in a platform that's going to have more data within it, well, it's possible then, I suppose, to give yourself, some warning checks. I mentioned earlier, a business here should be doing a bit of workforce mapping. How many contractors do we have? How many employees do we have? It's commonly the case that, for a business to explore this risk, they're not necessarily always sure about those, whether they've got contracts, how many they've got, or certainly not in any neat kind of place. But you may then just have a situation where, with all the data readily available, you could have some, in a sense, almost automated red flags. Because once you've got someone working very consistent hours of work as a contractor, that's the beginning of triggering, I would say, time to go and have a look into whether or not you've actually got an employee on your hands. All right, so we will then move into wage theft there. And look, all of this is related. Everything that we've talked about in terms of what are the entitlements, how are you managing the entitlements, really boils down to, yes, there's a lot of risk in a business here that you're not paying the entitlements correctly, which is how we kind of finally now land at wage theft. January 2025, the law will be changing to make wage theft a criminal offence. Now, this is pretty significant. When we talk about wage theft, underpayment of wages, this is an, I guess, ever significant and ever serious issue for businesses. And it's probably for two reasons. Number one, the enforcement activity from people like the Fair Work Ombudsman just increases year on year in terms of prosecuting businesses for not having complied with their obligations to employees. The Ombudsman can come and investigate your business anytime they like. They have very broad powers to come and investigate just because. But employers are also becoming more and more aware that they may very well have entitlements which haven't been paid. And so they're doing some looking themselves, and they're also more likely to reach out to the Fair Work Ombudsman and say, I've got some concerns. So one of the key reasons that this is an issue is that you're far more likely to be prosecuted for this or face enforcement action for this than you would have been, say, 10 years ago. The second part is reputational damage. Underpayments make the news now. There are, you can probably all think of many, many examples of very big, well-known businesses that have had very significant underpayments. And so it's now something that you need to manage. It's going to reflect poorly on a business. And it is the type of thing that will be reported on certainly the bigger businesses will always be pounced on by the papers. But even the Fair Work Ombudsman works very hard to publish any of its prosecutions and make sure that that aspect of awareness, which is part of their enforcement program, is made out. So basically, over the last couple of years, this has just got more and more and more serious. And now we're landing with it actually being criminalised, which is significant, with wage theft being a criminal offence. And basically, the definition of it is intentionally engaging in conduct that results in underpayment of employee. Now, that is a very serious bar. That's not quite what we're talking about in terms of accidentally not realising someone was entitled to a particular amount, but certainly no reason to stick your head in the sand, because any kind of willful ignorance on these things will always land you in hot water. But it's significant. You know, the maximum penalty there is now 10 years imprisonment. So this is now being acknowledged as an extremely serious criminal offence. On top of the imprisonment, there's also or as an alternative or both, fines, which can be 3 times the amount of the underpayment, what's really the greater of that, or 1.5 million for the individual or 7.8 for a corporation. So they are significant penalties. And the point of all of this is that, you know, historically, even when there was enforcement action, the penalties rarely, I suppose, fit the crime. Certainly the message from the prosecutors that, you know, if you had underpaid thousands and thousands of workers, but the penalty enforced on you was, you know, 300,000 from the Fair Work Ombudsman, well, that would be nothing for a lot of businesses, and certainly as a percentage of their payroll liability, extremely measly. So there was not a great disincentive. Now there's a very, very serious disincentive, given it can be 3 times the amount of that underpayment there. So definitely possible it's going to far exceed the 7.8 million there for the corporation. So when we talk, we just want to come back to the offence elements there, intentionally engaging in the conduct that results in underpayment of employee. I mean, you might have heard about businesses like 7-Eleven implementing schemes where they sort of deliberately paid employees and then required them to pay some cash back to them, so that on paper it looked like they were complying, but in reality they weren't. Now that would very much be a case of intentional conduct resulting in an underpayment. But I think the critical thing here is, you know, you won't get away with willful ignorance of saying, well, we just never checked. We never checked if there was an award. We never checked if there was an enterprise agreement. We never checked if we, you know, were actually making the payments we said we were. That won't get you by. So it becomes critical then at least to have a process in place, and at least to be able to say, you know, well, we did actually explore those things. You know, whether we did engage a third party to help us with it. All becomes critical on that intentional aspect. But even if we look at that last dot point there, even if we're not talking about meeting the threshold for criminal activity, so imprisonment falls away, this isn't going to be a criminal offence, still got very significant penalties, even where we're talking about conduct that's not intentional. You're still looking at, you know, in your personal capacity, maybe as a director or a senior person in the business, a head of HR, for example, looking at a personal penalty of up to 187,000 there. That's per contravention. So there might be any of a number of contraventions of the Act when you have an underpayment, and 4.7 million there on the company. So there will be a significant enough deterrence for getting the prison time. This is without the intentional conduct. So whenever a court's looking to penalise a business when there's been an underpayment, they will absolutely look at what steps did you take. And so where you in good faith made a mistake, yes, you're still going to have to pay the money back, of course, to the employee who was owed it, but that will very significantly reduce any kind of penalty you might actually be looking at from a prosecutor. So I think it's going to be critical for any business to, yes, a mistake might happen, but you must have a process in place, whatever that process looks like. Whoever you use to help you out with it, whether you manage it internally, you must have a process, because that will be critical either on making sure that you're not meeting a criminal offence threshold, or at least very significant in relation to penalties. But I hand over to you, Chris, to speak more on how those systems and processes actually are going to help in relation to wage theft and preventing it, really.
Yeah, thanks, James. So again, obviously I'm talking more from a technology perspective, but the key thing I wanted to start off with is, in my experience, a large portion of this is usually linked to overtime calculations and misunderstanding. It's rarely about miscalculation of a base pay rate, because that's pretty straightforward. It's like, minimum wage, etc. But in the award, even then, there's a base pay rate, etc. It's usually linked to either a misinterpretation, sadly, some ignorance in relation to a change that, working X number of hours then attributes to an overtime payment here, or a meal allowance, or whatever it may be. They're often where I've found the most regular case where this has occurred. And often it requires analysing and going back years. So a couple of key points on that is technology allows you to obviously have that history, be able to understand if you did have an issue, not that you do want to have an issue, but the key thing around it is applying changes is also far simpler, because you don't want to have an issue where, you've also then got a flow-on effect on superannuation, payroll, all of the legislative payments, which we mentioned before. So the key thing is really understanding those awards and independent audits. Honestly, that's these large companies out there where they do have large payroll teams, and mistakes have happened. Generally, what occurs is one individual finds an issue with one pay, whether it's an employee querying something. Then they do an investigation, they uncover, they get a third-party auditor in, and that's when they uncover the level of it, and obviously need to disclose that. So the key thing is doing those independence checks up front. Don't presume everyone's infallible. No one's infallible. Having a second set of eyes, having obviously some accounting and legal advice associated with interpreting the in particular the awards, that's really a key component. The other thing around it is linked to this is superannuation, and everyone to be aware that in 2026 we're moving to real-time super. And that is in particular being put in place because employers are missing deadlines for paying superannuation. We've got quarterly cut-offs, monthly cut-offs, and now it's essentially going to go at the same time as wages. That's going to be a big change, certainly a big issue for businesses to manage cash flow and those sort of components, but it's being implemented specifically to reduce down these instances and also reduce the risk on employers miscalculating, forgetting to do something, etc. So we all know that if you miss an ATO payment, they're on your back immediately. Super is harder to see that. And then when you hit literally if you pay a day late, technically, it's got to be advised as part of the processes and things put in place by Fair Work. So this is a really key area, but the big areas I've seen where this has occurred is generally superannuation and, as I said, around overtime and those sort of components. And technology allows you to apply that, but only if you set it up correctly. So implementation setup is the key message I have here.
All right, thank you, Chris. And we might, if we get our final questions submitted in there, we'll move to Q&A as soon as we can. There's something there, the free download for you. We've dealt with a lot of these things in a guide, so you can QR code it there, or otherwise get it emailing us through the contact details at the end. There's a guide on how to prevent wage underpayment. It covers a lot of things we've talked about today. And if our next webinar, how to successfully complete your business sale, 28th of November, 11 a.m. So you can register at the link then. And again, any issues with that, our contact details at the end, you can get in touch with us. I want to talk briefly about membership with LegalVision. So as a member of LegalVision, you can have access to over 100 lawyers. We're a full service law firm, so we're covering off on all areas. And actually I see today there are quite a few questions about superannuation, and good time to mention that we've got an in-house tax team who can give you the very clear and accurate answers on those super questions far better than I will, but I'm going to touch on a few of them in the Q&A. But also for joining the webinar, you're also eligible to receive a complimentary legal health check with us. We'll discuss how we can help the business. So again, there's a survey at the end, fill out the details there, and that's how you can get in touch. Got Chris's contact details up there, so his email, and of course, otherwise, once again, our contact details will always be happy to put you in touch with Chris for anything sort of payroll compliance related. If you're looking at an outsourced system, HR platforms, payroll compliance, Chris absolutely the person to help you with on all of that. Now, Q&A, as I said, there are quite a few in relation to super. So just to touch on, I guess the one is in relation to penalties if it's not paid on time. Again, same caveat as before that I'm not a tax expert. Our super team can absolutely, our tax team can absolutely handle all of these. But when you don't pay on time, you're effectively then liable. So you have to notify the ATO immediately. You potentially then pay a super charge, so you can pay up to 200% of what you were meant to pay, which you'd have to then pay to the ATO. You also start paying interest on the unpaid amount immediately. And there's also an administration fee which you need to pay to the ATO in relation to your late payments. So there are, I understand, a host of other issues which can then flow on from late superannuation payments, which I'll leave to our tax team, but absolutely something to explore. There are significant consequences for getting it wrong. I know there's one in there about, I mentioned, yes, some overtime can be excluded from the obligation to pay super. Again, not an expert, so something worth exploring, but when it comes to ordinary time earnings, I think it's the case that if there's sort of pre-planned overtime that's being worked, then that can attract a superannuation contribution, but the general principle is that overtime won't attract it. Other people have asked in relation to contractors, do you have to pay super? It's a pretty niche or just certainly a case-by-case consideration, but the position is you absolutely can be liable to pay superannuation for your contractors. At a broad level, the test is around whether you're engaging them, the term is wholly and principally for their labour. And some of the things that get considered as part of that test will be, are you paying them an hourly rate, again, just for their labour, as opposed to things like, are you just paying them to achieve a particular task? And then questions like, do they have the right to delegate the performance of work? So there's a lot that goes into that consideration. So certainly worth getting to the bottom of, because the last thing you want is to end up with a superannuation liability. And it commonly occurs when a contractor, checks their own super fund and realises that they haven't been making contributions when they were meant to, but the person they put their hand out to is the company. There are things you can do in the contract, not necessarily to sort of contract out of that obligation, but to characterise the arrangement more in relation to, achieving a task rather than sort of hourly rate type arrangement. So absolutely something critical worth getting to the bottom of, and as I said, a very much case-by-case consideration. Someone's asked, how do contractual set-off arrangements work versus an award? It's a really good question. It's a common thing that a business will do. So if we think about all of those entitlements that we were talking about over time, the base rate, penalties, allowances, you absolutely can pay an employee an all-encompassing rate, commonly an annual salary. You just need to have really two critical clauses in the employment contract to make sure that you are then ultimately satisfying those entitlements that the employer might have under the award. The first one is a total remuneration clause, which basically says the salary we pay you compensates you for all allowances, loadings, penalties, etc., 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 and it needs to express absolutely every entitlement that it's covering. So that needs to be a very carefully drafted clause, but that makes it clear that we can apply the salary to those entitlements. And the other clause you want is an offset clause. And that basically says that if any one particular period we technically underpay you, let's say you work a heap of overtime in 1 month or 1 week, well, we normally overpay you because you don't normally work that much overtime and we pay you this particular salary. So we want to make sure we've got that clause that says, although we underpaid you in 1 small period, we're allowed to use the overpayments that we previously made and that we ordinarily made to offset that underpayment. So two critical clauses to have in the agreement. And I think then potentially there's another one about penalty rates in relation to a casual employee under 18 years old. So if they were working in a burger shop. So someone working in a burger shop, very likely covered by the fast food award. And it's going to set out those entitlements to things like penalty rates over time. I'd have to go and look at that award. I'd be very surprised if it said penalty rates applied to adult employees and not to junior employees. But the answer is it's the terms of that particular award which is going to give you the answer to that question. Now, with that, I'm sorry, there are a stack of questions which we haven't been able to get to there, which I will just say our final slide here then is just here giving you an opportunity. If we click through to the next slide, you can claim your complimentary consultation with us. As I said before, there's a survey at the end. Be very grateful if you can fill out that survey, but that's also how you can claim the consultation. So if there's anything that we haven't touched on, anything you want to work through further, then please use that as an opportunity for that. I'm right at the end there, so I'll just take this as an opportunity to say thank you very much for Chris for joining me today. It's been great to have you here, and thanks everyone at home for joining us too.